Every generation has its hidden opportunities, moments when ordinary people discover something the world has overlooked, and those decisions change their lives forever. In the late 1990s, when Amazon was just an online bookstore, few believed it could ever compete with retail giants. Its stock traded for less than $2. Those who saw the value became millionaires. In 2010, Tesla was dismissed as a failing car startup. Its shares were barely in the double digits. Today, it's a global powerhouse. The truth is, the market is never perfectly priced. There are always hidden gems, undervalued stocks that the world ignores until it's too late. And in 2026, these hidden opportunities are bigger than ever. Wall Street won't tell you about them. Analysts will keep you distracted with the big names, the headlines, and the hype. But beneath the noise are companies trading far below their true value. Companies with strong fundamentals, breakthrough technologies, and future potential that could make early believers rich. And today, we're not talking about hundreds of stocks. We're talking about the top 5 undervalued stocks for 2026. Real companies, real opportunities, explained in detail. These aren't vague predictions or empty promises. They're specific names that could define the next financial wave. So, if you've ever wondered how ordinary investors spot life-changing opportunities before the rest of the world, this is it. Stay with me, because what you're about to see may be the most important 5 stocks you hear about all year. 5. Palantir Technologies, PLTR. At number 5, we have Palantir Technologies, the data analytics company that Wall Street has constantly underestimated. For years, Palantir was dismissed as a government contractor with no clear future in the commercial market. Analysts said it was overhyped, overvalued, and destined to fade. But quietly, Palantir has been building the backbone of the AI-driven data revolution. Here's the reality. Governments, corporations, and even financial institutions are drowning in data. Palantir's platforms, Gotham, Foundry, and Apollo, turn that chaos into actionable intelligence. Whether it's predicting military threats, streamlining supply chains, or helping banks detect fraud, Palantir's AI-powered analytics are becoming indispensable. The numbers tell the story. Despite skepticism, Palantir's revenue has been climbing, with government contracts locked in for years and commercial adoption expanding faster than ever. In 2024, Palantir announced key deals in healthcare and manufacturing, showing it's not just a government player anymore. It's becoming a global enterprise solution. So why is it undervalued? Because Wall Street still looks at Palantir through the rear-view mirror. They remember the volatility, the controversy, and the skepticism. But they're missing the bigger picture. Palantir is positioning itself at the intersection of big data and artificial intelligence, 2 of the fastest-growing industries on the planet. For long-term investors, this creates a classic undervalued opportunity. The market isn't pricing in Palantir's future potential. Yet by 2026, as AI adoption explodes and data becomes the most valuable resource on Earth, Palantir could be one of the most important players in the game. Don't be surprised if years from now, people look back at Palantir the same way they looked at Amazon in 2001 or Tesla in 2012. Dismissed by the crowd, but a fortune maker for the believers. 4. SoFi Technologies, SoFi. At number 4, we have SoFi Technologies, the fintech company rewriting the rules of banking for an entire generation. For years, traditional banks dominated the financial world. They were slow, rigid, and filled with fees. Then came SoFi, offering digital-first banking services, student loan refinancing, personal loans, credit cards, insurance, stock trading, and even crypto, all from one seamless app. Wall Street critics said SoFi was just another startup chasing hype. They pointed to its unprofitable quarters, regulatory hurdles, and intense competition in fintech. But what they overlooked is SoFi's ability to capture millions of young customers who are turning away from traditional banks. Here's the story that most investors miss. SoFi isn't just an app. It's a bank with a license, deposits, and full-scale lending capabilities. Unlike many fintech peers, SoFi owns its infrastructure. That means higher margins, more control, and the ability to grow like a real bank, without the legacy baggage of old institutions. In 2024, SoFi reported strong growth in deposits and lending, despite high interest rate environments that crushed many competitors. They continued to expand into new products, creating a full financial ecosystem. By 2026, as interest rates stabilize and fintech adoption accelerates, SoFi could be positioned as one of the dominant consumer banks of the digital age. Why is it undervalued? Because investors are still judging SoFi based on its early growing pains. They see quarterly losses instead of long-term infrastructure. They see volatility instead of loyalty. But SoFi has something Wall Street often underestimates: brand power with an entire generation of millennials and Gen Z who may never step foot in a traditional bank branch again. If Palantir is the hidden gem of AI and data, SoFi is the hidden gem of consumer banking. And when the world wakes up to that, the investors who believed early may see the kind of upside usually reserved for once-in-a-decade opportunities. Number 3. Block Inc. SQ. At number 3 we have Block Inc., formerly known as Square, the fintech and payments giant founded by Jack Dorsey. Block has always been more than just a credit card processor. From the beginning, it gave small businesses the tools they needed to compete with giants: point-of-sale systems, mobile payment readers, and financial services that were once only available to big corporations. Over time, Block expanded into Cash App, Bitcoin integration, and now a growing ecosystem that blurs the line between fintech and crypto. So why is Block undervalued? Because Wall Street has punished it heavily in recent years. Concerns about competition, slowing consumer spending, and exposure to Bitcoin dragged its stock price down. Analysts turned cautious, and many investors lost interest. But here's what the market is missing. Block is building an entirely new financial infrastructure. Cash App has become one of the most widely used peer-to-peer payment platforms in the US, especially with Gen Z. Afterpay acquisition gives Block a powerful entry into the buy now, pay later market, connecting millions of consumers and merchants. Bitcoin and blockchain integration keep Block at the frontier of the digital asset revolution. In 2024, while the headlines focused on the negatives, Block quietly grew its user base, strengthened its merchant network, and positioned itself for the next wave of financial disruption. By 2026, as the economy stabilizes and digital payments accelerate, Block could emerge stronger than ever. What most investors don't realize is that Block is playing the long game. It's not just a payments company. It's becoming a financial operating system for both individuals and businesses. When Amazon started, it was dismissed as just an online bookstore. Today, it's the backbone of global commerce. Block could be following a similar path, overlooked in the short term, but potentially transformative in the long run. That's why Block earns its place on this list of undervalued stocks. In 2026, it may not just rebound, it may redefine what the future of money looks like. 2. Intel Corporation, INTC. At number 2, we have Intel Corporation, a name everyone knows, but few realize just how undervalued it has become. For decades, Intel dominated the semiconductor industry. Its chips powered the world's computers, servers, and data centers. But in recent years, Intel stumbled. Competitors like AMD and Nvidia surged ahead in performance, AI chips, and innovation. Wall Street labeled Intel as outdated, slow, and left behind. Its stock price reflected that pessimism, trading at valuations far below its historical peers. But here's the overlooked truth. Intel is mounting a comeback. Under its new leadership, the company is investing tens of billions of dollars in cutting-edge manufacturing facilities across the United States and Europe. These fabs aren't just about making chips, they're about securing global supply chains. With governments prioritizing domestic semiconductor production, Intel is in prime position to benefit from billions in subsidies and strategic contracts. In 2024, while Nvidia dominated headlines with AI GPUs, Intel quietly launched new chips for data centers, AI acceleration, and advanced process nodes. By 2026, as demand for semiconductors continues to explode, not just for AI, but for cars, cloud computing, and smart devices, Intel's expanded capacity could give it a resurgence few expect. Why is it undervalued? Because Wall Street is still stuck in the past, focusing on Intel's failures instead of its future. The market has priced Intel as if it's finished, but the reality is the opposite. Intel has the resources, government support, and global footprint to stage a comeback. History shows us that giants often stumble, but they also rise again. Apple nearly died in the 1990s before reinventing itself into the most valuable company on Earth. Intel today may be at a similar turning point. For investors willing to look beyond the noise, Intel isn't just an old chip maker, it's a sleeping giant. And in 2026, that giant may wake up with a roar. Chapter 1. Disney. Dis. At number 1, we have Disney, a global icon that many investors have written off, but one that may be the most undervalued stock of them all. Think about it. Disney isn't just a company, it's a brand woven into the fabric of global culture. From its theme parks to its films, from Marvel and Star Wars to ESPN and Disney+, its influence touches nearly every household on Earth. Yet in recent years, Disney has been hammered by challenges: declining cable subscribers, streaming competition, pandemic disruptions to theme parks, and rising debt. Wall Street punished the stock, pushing it to valuations that hardly reflect the empire behind the name. But here's the story that's being overlooked. Disney is in the middle of a massive transformation. Its streaming platform, Disney Plus, has become one of the fastest-growing services in the world, rivaling Netflix in global subscribers. Its theme parks, after years of setbacks, are roaring back with record attendance. And its film studios still dominate the global box office with franchises that continue to deliver billion-dollar hits. In 2024, while investors focused on its short-term struggles, Disney quietly laid the groundwork for long-term strength, consolidating its streaming strategy, monetizing its massive intellectual property, and preparing to expand into new markets. By 2026, Disney could be a very different company than the one Wall Street sees today. Instead of a struggling media giant, it could be a cash-generating machine fueled by parks, films, sports, and digital platforms. Why is it undervalued? Because analysts see the debt and the temporary setbacks, but they miss the undeniable fact that Disney owns some of the most valuable entertainment assets in history. Assets that will outlive short-term disruptions and continue to generate revenue for decades. Disney's story isn't one of decline, it's one of reinvention. And for investors who recognize that early, buying Disney at undervalued prices in 2026 may be like buying Apple during its turnaround, or Netflix before streaming went mainstream. That's why Disney takes the #1 spot, a legendary company trading at a discount, waiting for the world to rediscover its true value. So there you have it, the top 5 undervalued stocks for 2026. From Palantir's hidden role in the AI revolution, to SoFi reshaping banking, to Block building the next financial ecosystem, to Intel's comeback story, and Disney's global reinvention. These are not just tickers on a screen. They are opportunities hidden in plain sight. If you made it this far, you're already ahead of most investors. Because while the crowd chases hype, you're learning how to spot real value before the world catches on. And that's how fortunes are made. But this is only the beginning. On this channel, we dig even deeper into AI, crypto, stocks, and the future of money. So if you found value today, make sure to hit that subscribe button, smash the like, and turn on the bell, because the next video could show you the exact play that changes your financial future. And don't stop here. Go check out our other video on AI algorithms that could dominate Wall Street in 2026. If you thought today's list was powerful, that one will blow your mind. This is your moment. Stay curious, stay ready, and I'll see you in the next video.